Hey everyone, I'm Joy Norwood with the Superior Property Group at Keller Williams. And today we're talking about the things that an aspiring homeowner should not do. So this will be fast, right to the point, and full of impact. So let's go. There are some things that I've seen derail deals at the last minute, even when a buyer was so close to closing. So let's save you the stress, the heartache, and the lost money, okay? Let's dive in. So, number one, you don't want to change your job, quit your job, or suddenly become self employed. Lenders want stability. They love a stable employment history. Now, there are some exceptions. If you just graduated, you have a salaried offer letter, or you have an offer letter stating your hourly wage and your guaranteed hours. Totally fine as long as you meet everything else. But please do not switch careers in the middle of your loan process. Save that until after you close. Number two, do not buy a car, truck, or van. And oh my gosh, this one gets more people than you would believe. Buying a vehicle changes your debt to income ratio, and that can completely kill your approval. Car dealerships will always find a way to get you approved, but mortgage lenders, not so much. So do not buy any new wheels until after you get those keys in your hand, and I mean your house keys. Number three, do not run up your credit cards or let any account fall behind. When you use too much credit, you look high risk. When you're late, even by 25 cents, you look unreliable. And I've had buyers fully approved who lost them home because they made a late payment during underwriting. So if you're struggling with a due date, just call your creditor and ask for an extension. Most of them will allow it if you've been consistent previously. Number four, do not spend your closing money. Do not touch it. Do not move it. Don't even look at it wrong. You never know when your lender is going to ask you for more reserves or when a lender will decide they want to see extra funds in your account. They can check your bank statement all the way up to your closing day. Number five, do not hide debts or liabilities. And this one breaks my heart because I've seen buyers lose homes over it. Early in my career, I had a buyer who did not disclose student loans. They weren't on his credit report, but they still existed. And boom, the loan was denied. Another buyer had a hidden lien, was on a credit report, but it was in the court records, and the creditor wanted a full payment immediately. My client couldn't pay it, and the deal was dead. So be honest, be upfront. And if there's something messy, let's fix it before you start shopping. Number six, do not buy furniture before closing. I know you're excited. I know you're already decorating the living room in your head, but please do not buy furniture yet. I had a client nearly lose their home because they spent their reserve on a furniture the week before closing. Buy the couch after you get the keys, your house keys. And I promise rooms to go in Ashley aren't going anywhere. Number seven, do not open new credit or create new inquiries. Inquiries make it look like you're shopping for credit because you need money. And that's a huge red flag. Opening new accounts during that loan process is one of the fastest ways to get denied. So just don't do it. Number eight, do not make large deposits without talking to your lender. You got money in your sock drawer, under your bed, in the freezer, in the closet, leave it there. Any large deposit has to be verified. And if it can't be verified, it becomes a problem. So always call your lender first before depositing anything unusual. Number nine, do not change bank accounts. If you switch banks during that long process, guess what your lender is going to need? 2 full months of new bank statements. And I've seen this delay closing by weeks. So whatever the bank you're using, stick with it until closing. If you got Chime or Cash App, they prefer you have a regular bank account. So just open it. Number 10, do not co-sign for anybody. And I've had amazing clients build their credit, get ready to buy a home. Then their family member or friend comes and say they want them to co-sign on a car. And that same person who could not qualify on their own, guess what? They start missing payments. But guess what? Now you have missing payments, late payments, a repossession, and this will prevent you from being able to purchase a home or get qualified for a home. So you need to protect your credit like your life depends on it because it kind of does in this market. And I've seen real people lose real homes over every single one of these, and I don't want that to happen to you. So if you have questions about your specific situation, you can feel free to reach out to me, and I'm here to guide you every step of the way. I'm Joy Norwood with the Superior Property Group at Keller Williams, your realtor of choice when service matters. Hey, it's Joy Norwood. And listen, if you don't follow this channel, there's a good chance you'll never see me again. I consistently put out helpful content for those that are currently in the real estate market. This information can be extremely helpful for your buying and selling needs, so be sure you like and subscribe here. Leave a comment to let us know if this video was helpful for you. We're here to help the Central Mississippi area, and we always love your thoughts and questions. Follow now, and then we'll see you with our next helpful video.